Well, Larry, we've just listened. I don't know about you. I just spent the last like 5 hours either preparing or listening or getting this all together. Yeah, this is Larry Goldberg. He is the co-host of Monday and Friday Night Good News. Randy's world, and but tonight it's Wednesday. You're here because there is nobody that I would rather have on Wednesday night after an earnings call than you, because you understand spreadsheets, you understand planning out with your multiple businesses, as well as being in the venture capital world. This is between you and I'm in the manufacturing world. We have some skill sets that just aren't out there in much of the community. So anyway, first impressions of the earnings and the earnings call and everything that just took place.
Firstly, the earnings beat my expectations. I was very impressed with the margins. There's still industry-beating margins. I know this community expects 30% margins.
Never going to happen.
The auto industry is, well, it has happened.
Yes, right. Yeah.
The auto industry is very comfortable with 5 to 9% margins, 10% margins. We came in at 17%. It was amazing. It was beyond the top end of my expectations. I was incredibly impressed with the cost control on their operating costs. I just cannot believe how they've been able to contain their operating costs through this very, very tough inflationary cycle.
Yeah.
But if you look at their operating costs, every single quarter they beat our expectations.
And they do it while they grow. And every organization, there's a law about organizations and growth, where as you grow, you start putting in these layers of horrible people that don't do anything valuable, and you get layers of management. And I mean, they seem to be able to avoid it, at least up till now.
It is extraordinary. And if you look at the Googles, the Metas, the Microsofts of this world, their operating costs are out of, they just grow. Amazon even just grows every quarter, blah, blah, blah. I mean, Tesla just keeps beating that number. It's extraordinary. And so the numbers impressed me because on top of everything, can I share my screen?
Absolutely. Let me set it up first. Yeah, go ahead.
What really impressed me beyond everything, and which I think is the underlying focus of the call for me, was this chart. In their charts. If you look at this, the cost of goods sold in this per vehicle, just look at how they came down from 39,500 to 36,000 and change.
Right.
$3,000 in 1 year. I mean, if you're in a manufacturing company, this is just truly, truly extraordinary.
And normally, Larry, because there's going to be some sophisticated people in the audience right now, normally I would look at something like that and I would say, yeah, but you've got this whole range of products. How can we know that it's really a generalized drop in cost? But the fact is they built more Model Ys as a percentage of sales, not fewer. So this number's better than it even looks.
Yeah, I mean, it's impossible. It's impossible to gainsay this number, because if you just look at their numbers, I mean, the Y just completely obliterates all the other numbers. The 3 is a little bit, well, for this period, it wasn't that much. It was lower than normal, and normal is low. And the X and the Y are just, they're not dollars. So it's all about the Y, and it's all about how they brought the numbers down. And that's how they keep this absolutely industry-beating margin. Now, we got used to 30% margins, or we got focused on 30% margins. You know, some of us were even tweeting about 40% margins. I won't mention names, but you know, we got kind of enamored of the 30% margin. But the truth is, it's a car.
Yeah.
We're in the auto industry.
Yeah.
The margins in the auto industry are between 3 and 9%. The industry leading company is like 12%.
Yeah.
Tesla at its nadir, at where we are right now, is at 17%. Come on, guys. This is like winning, the Olympics 4 years in a row. Four Olympics in a row. I mean, this is unbelievable.
And they spent quite a lot of time in the question and answer period really trying to drill down on that number to find out, can it be continued?
Yeah, can it be
and
continued?
It was at the very, very end, I think, that they finally got into really the nuts and bolts of it. And apparently, as they went around the room, each department said, look, we've had some benefits in logistics. Then they move over. We've got some benefits in design, still coming. We got benefits in raw materials, still coming.
Yes.
We have benefits in batteries, still coming. Imagine if they drop the cost of goods another 10% next year, or even, let's call it 7 or 6.
I think it's quite clear from the conversation that, let me just say one thing. In the actual quarterly update, they did say we're reaching the limits
on natural benefits of ramp. Yes.
Correct. And so what they're saying is that their volume growth is not going to produce this kind of reduction much more.
Right.
But then when you heard them go around the room, as you point out, they all talked about all the possibilities, in the logistics and what Jeff Lutz would call the second order impact.
Yes.
Of improvement. And so, I listened to Jim before the call, Jeff before the call, and I'm very comfortable to say that, Tesla are going to continue, not necessarily at the rate I showed, because that's just extraordinary. In 1 year to go down from 39 and change down to 36 and a quarter. I mean, it's just extraordinary. 9% in 1 year. It's not going to happen again.
So if I'm a competitor, whether it's an ICE competitor or an electric, a BEV competitor, and I'm looking at that, and I just heard what I heard in the call, I got to believe that they're shooting for 5, 6, 7% additional cost reductions next year. And what do I do?
I agree.
And Larry, I've got this question for you. I cannot figure this out. It is driving me nuts. I'm trying to now position this channel as where we talk about stuff that nobody else is talking about, and nobody else is talking about IRA. It is in the deck. The deck includes it. It shows that the cost of goods sold was impacted by IRA savings on the batteries. But then in the call, they said the batteries are on a fine ramp. They're doing great. So we're going to be looking at $4.5 billion probably in tax savings this year from the Austin factory alone when they hit 100 gigawatts. $4.5 billion in cost reductions is $1.50 a share. I mean, it's a lot of money.
I haven't looked at that you have, and that's very interesting, and I will look at it. So, I mean, that's a big number.
It's a huge number. It's $45 a kilowatt hour, and they're talking about 100 gigawatts. Unless I've made a huge mistake, I know I haven't.
Well, don't Panasonic get a fair?
No, I'm talking about Austin.
Oh, you're talking about just Austin, given the volume of batteries, yeah.
They've just said that line 1 has been fully switched over.
Yeah, they said that batteries 4680 is ahead.
Right.
The Cybertruck. They said that. Now, what doesn't add up is that they're not delivering wires with the 4680 yet. Again,
But he said he's building up some inventory in order to be able to make that switch.
Right. And they used a different battery. They used Mark 1, version 1. They
Right.
haven't used version 2.
Right.
So we'll see when that switch occurs. So that's an interesting moment.
Yes, but that, I mean, that's just huge. Larry, one of my other questions is, okay, I know I call myself a marketing guy. I know I've been in manufacturing and I started manufacturing companies, but the reality is you probably would be surprised to hear me say this. Most people would say I'm a salesman.
Really?
Yeah, that's what they would
That
say.
shocks me. That shocks me.
I know.
I have no idea why you would say that, but
So I sit there and I listen to the call. Even before the call, I'm writing this down in my notes.
Right.
How can they not sell your number, 2.4 million vehicles next year? We'll agree that there's a 3 million actual capacity. They were showing 2.35 or something like that, but the real capacity is 3 million. All right, let's do 80%. That's what Jeff
Well,
Lutz.
you don't have to do that.
Okay.
Let me tell you what went through my mind when they
Okay.
said 2.3 million.
Right.
If you look at the manufacturing capacity at the beginning of a fiscal year,
Right.
and you compare it to the manufacturing capacity at the end of that fiscal year.
Right.
I mean, I have to go back and actually do the numbers, and I mentally told myself I would do that during the call. But when they come and they show you on black and white that their current capacity is 2.3 something, almost 2.4 million, based upon history and based upon the developments that's going on, by the end of that year, that's going to be 3 point something million.
Right.
From that, you can derive the manufacturing capacity. Now, there are obviously some issues there because they're in a ramp on one, and other issues. But I would like to know, when have they ever started the year with a manufacturing capacity that they haven't ended the year exceeding that
capacity? Yeah.
Production, capacity in production.
I'd love to have you check that out. And I'll check it out.
So I will do that, but my gut tells me that my 2.4 million is on.
Yes, my gut tells me the same thing. And Larry, the other way to look at it is, if you've got already 2 million happening, can we not add 100,000? We're going to add 75,000 trucks, add 100,000 in Shanghai, add 100,000 in Berlin, add 200,000 in Model Ys in the US. You're there. I mean, we're not talking about a lot. So here's where my salesman thing came in. If I was sitting here with 3 million capacity and 80% of that's 2.4, and to your point, you're starting the year with that capacity on the books, so to speak, you should be at 2.4. If you can't say to the world, we're going to do 2.4, I would be in front of my sales team and I'd be yelling and screaming. I know I would, because I've done it. What do you mean we can't do 2.4?
I know. Well, look, we have to leaven that with a little bit of caution. And that is, and I've said this before on this channel, we are reaching the limits of the TAM of the two mass market vehicles that we have. It's the Model 3 and the Model Y. I think the Model 3 is going to be revived because of the refresh. The Model Y may have to pause production for a refresh during the course of this year or by the end of the year, but it will have to. So there are mitigations, there are limitations to what we're talking about. And, the Cybertruck is not going to fill that hole, and that will be a hole. So we have to be a little cautious about that. Now, on the other hand, I don't see why, Shanghai should stop for anything now. Well, there's a possible, I guess, Y refresh.
Right.
But I mean, Shanghai should go gangbusters with 1.2 million, in my judgment.
Yeah.
And they're already, this week they did a record production.
Yeah.
So, I think Tom Hughes got that in his pocket. So on balance, the opportunity for a really strong year, despite all of their lack of guidance And that lack of guidance is killing the stock price right now.
Right.
You're worried about the stock price. I mean, I think 190, 180, 170 is on the cards. I had the opportunity of a cheap shot,
Right.
and we talked about it. I decided not to take it because, frankly, I wouldn't even enjoy making that money. I mean, I'm serious. And it's not a lot of money. And, why take the risk? Anyway, so the point that I'm trying to make is that I think we're going to see the share price recede because of the lack of guidance.
Right.
I think this is a fantastic opportunity for those that do have dry powder. No, there's not advice. Don't do this.
No.
You're going to make your own mind up. But that's my feeling. And, I felt going into this that that's where we were going to end up, because this company has just a deaf ear to investment advisors' advice.
Yes.
Now, whether Martin is giving them good advice and they're not listening, or Martin just, believes that the end game is what is the key here, whatever it is, they chose not to give guidance. And it could simply be, Elon's preference. And, I'm aligned with him on this.
Well, then say it. Just say, we're not going to give guidance anymore. That's what Apple did.
It would be better. It would be better than not to say it. I'll buy that. Yeah,
So
but
Larry,
he's not going to give advice. He's not going to give advice. Look, the guidance that we live by is 50% per year.
Yeah.
Some years will be greater, some years will be less, but over time it'll be 50% a year. That guidance is what I live by.
Sure.
I bought it. I've done very well with it, and I feel very comfortable with it.
Yeah. So
very exciting.
Yes.
You're missing, the headline.
Yes.
Everybody's missed the headline.
Okay.
Optimus is 2025.
Yeah. Okay. I was just going to say, we have two headlines, actually. He confirmed, yes, he confirmed that Gen 3 is 2025.
He did, but it was disappointing to me that it was late in 25. I was hoping that a little bit ahead.
Well, he said second half. He just said second half.
Yeah. With him, second half is December 30th,
But he might have been encouraged to, sandbag. So
under
promise. Under promise.
I haven't heard him under promise yet, to be honest.
But maybe they're really, they're all in anyway. So so
it's been a little secret. It's not that late. He's not that under promising guy. But look, 2025, we're going to see the announcement and the rollout of the next gen. I was hoping it would be this year, with the ramping next year, early next year. It's going to be next year. And Optimus is going to be delivered next year. Yes, now, I had some people, on X challenge me on that, and some people who, fairly knowledgeable Tesla investors. But I'm going to buy that because, I think that the competitors are going to be rolling out next year, and I think Optimus is going to be rolling out this next year. I honestly don't think Optimus is as big a challenge as FSD.
No, well, maybe not. I think what I tried to read between the lines with Elon on his Optimus description. And so here's what I got, and let's see, Larry, whether you think the same. He said it's already doing useful tasks, but they're very specialized. I think he doesn't want to go out with a bot that can do useful, specialized tasks. He wants it to be general purpose. And somebody else said that a while ago.
I'm not going to buy that.
You don't buy that?
You're not going to sell me that.
No,
I think general purpose is I
don't mean in the home. I mean in the factory.
I think that's several years away. I mean, I've done a lot of diving into this, and I'll tell you, a factory environment is very challenging. I think the first the first uses of Optimus in the factory is not going to be in the factory. It's going to be in the just-in-time warehouse, in the factory building, but not in the production line itself.
Mm-hmm.
I think it's going to be very, very challenging. I'm not prepared. You're welcome to believe that. You're welcome to,
Well, what I'm saying, Larry, is I suspect that based on their statement, it can already do specific tasks in the factory. That's what they said. It can already do useful tasks.
Elon said it wasn't doing useful, and then Drew said, yes, it's doing some tasks, and then Elon said, well, not that useful. So I think you're being a little kinder than is warranted. I think we're a ways away from that. And the tasks that it's going to do are going to be limited to, moving a particular good from one place to another that's very well prescribed. It's going to be.
You don't think it could do basic tools like welding, drilling?
No.
Moving an egg and putting it into another location.
Moving an egg is a whole different ballgame, but in a production environment, doing a particular job like welding, which is incredibly skilled, even tightening a screw in a build requires not just dexterity to move the screwdriver, but timing in terms of getting into the job and getting out of the job, just a lot of things. I honestly believe that the jobs it's going to be limited to in the first instance, which is next year, is going to be at the just-in-time warehouse, just moving goods from the just-in-time warehouse to the line. I don't think the bot is going to be allowed on the line. Now, I have this perspective that I think that Tesla are only going to provide a managed environment or managed service of the bot in the first instance, where they have skilled people with the bots, whether it's 6 or 12 or 25 bots in a particular limited scope. That's my feeling. And I've looked at other bot companies, and I've looked at what they're doing. And I've also looked at bot companies that have built specialty bots for warehouses and so on and so forth. And I've looked at what they've had to do implementation. And I've also listened to the competitors talk about it. And so I think that we're all projecting far too much capability onto these bots far too quickly. That's just my view.
So if you take my most mundane example, which is, I know it's sometimes maybe a little hard for people to imagine, but of a blow molder opening up, ejecting a bottle onto the floor or onto a table in front of the bot, having him pick that bottle up and put it into a trimmer. It seems to me that that's no harder than what we saw the figure bot do with the coffee maker. He's picking up the bottle, he's putting it in a trimmer. That's what I have people doing 24 hours a day in my factory. That's all I have to pick it up, put it in the trimmer.
Yeah, the problem you have is that when the bottle is ejected from the machine and bounces and gets into a place that it's not normally at, or when it's ejected from the machine and gets stuck in the machine. I mean, I've run not run plastic factories myself, but I've managed plastic. I've owned plastic factories that have been managed under me.
Right.
And I can only remember Unilever calling us one day and said, "Come and collect these 400,000 margarine tubs and take them away. They don't fit the spec." And we discovered, I mean, yeah, I won't go into the detail, but the problem that occurred to change the spec was so mundane and so thoughtless. And, 500,000 margarine tubs later, we lost our boots on that contract. But the point I'm trying to make is that it's not the general case that's the problem. It's when the general case goes bad, that's the problem. And the reality is that happens more times than you think.
Well, not that I think. I ran a company for 29 years. I know that things go wrong, that bottles get stuck.
And that's the problem the bot has.
I understand, but my human operator has the same problem. He still has to react to the fact and push the button. All he has to do is push the button and say, "Don't make anymore." That's all you have to do.
And then somebody has to come and fix the problem.
Maybe it's another bot. Anyway, we're probably going too far.
Well, that's where you're getting carried away. I think that my own experience, my own lived experience with this is that it's not going to be easy, and they're going to have to start at a very mundane level, and particularly where it doesn't impact production.
Okay, let's leave it at that, Larry, for today. We'll have many more opportunities to discuss.
But agree to disagree.
We'll agree to disagree. So we've got Elon's mood. So I thought his mood was matter of fact, upbeat, optimistic, not at all negative. What did you think?
Yeah, I thought so too. I thought it was look for the cognoscenti, this was a great call.
Yes.
For the market analysts, this is a terrible call. Why? Because they didn't do what the market was waiting for. Tell the market what to expect for next year.
Yeah.
We're going to do this many cars. We're going to do this much margin. You're going to make this much money and bank on it. And then everything could be judged by that. And what they're saying is, look, based on our track record, judge us by how we're able to keep the costs down, keep the production up, sell these cars, and bring on these new lines.
Yeah.
We trust them. We agree that they're going to be able to do it. And we're looking for that future. And we think Optimus is going to come when they say it is.
Exactly.
So they're saying, put the stake in the ground, let us know what that stake is, and then we can value your company. And he's saying, no, not interested.
Yeah. So, I mean, to a certain extent then, Larry, maybe you and I talked about this on Monday. This would be a PE compression situation where you take the number of cars by the margins, figure out what you think the growth in profits is going to be. It's not going to be 50% a year. It might be 30%, it might be 20%, but now that only justifies a PE of around 30 or 40. Then maybe even some of the more conservative folks are throwing on some kind of optionality for energy, throwing on some optionality for Optimus, throwing on some optionality for FSD, et cetera. But you're not going to be able to keep an 80 or a 70 PE going. Is that kind of where we are right now?
I think so. I think so. I think we're going to see I'd be happy if the market doesn't get below 180, but it could go down to 160. I mean, that's what could happen. But, if it does go down there, I mean, that's a great opportunity.
Yeah, there's the opportunity. Exactly. So you have big miss on energy, I thought, in terms of what we were hoping.
For me, look, I wouldn't say I'm surprised. I would say I'm disappointed that we aren't seeing those numbers come in. So I'm just putting it forward to the next year. So I was out by 1 cent on my. So I did a estimate, and I announced it yesterday, and it was 71 cents. And my big miss was I had a lot more energy revenue and less car, auto revenue margin.
Yeah.
Well, they beat me on the car margin, but they missed me on the energy margin. So I wasn't out by that much.
But then he
Where
turned
I was out, I'll tell you where I was out.
Yeah.
I thought their operating costs would rise more than they did.
Yeah, yeah.
And their operating costs went down. I mean, it's incredible how they run this company. Incredible.
So
I was at 71. They came in at 70. Okay, to me that was okay. And the fact that they missed the analysts means that the analysts weren't paying attention.
So on the energy front, though, they did confirm that they do expect to be 100% up on the 40 gigawatt hours in Lathrop by the end of the year. But they didn't mention anything about doubling that. But they did say apparently they have.
Nobody asked them about China.
And nobody asked them when that would be ready to go.
When they're going to be ready to go. I mean, can you imagine? An analyst doesn't say about China. I mean, they're delivering, $3 billion of revenue out of USA. Can you imagine if Lathrop doubles, China comes in and they're at, they're what? They're going to be at like 5-7 billion. I mean, who knows? I haven't done the numbers on it, but man, it's exciting.
So now I kind of go back to something I did about 6 months. I think it was before you and I really started doing shows together. And I did a video where I talked about 2026 as being the year when it all comes together. Yes. And then if you do what do you want to call it? An analysis that's based on the percentage of likelihood. And I know Elon does this all the time. If you say, you know what, at this point, I could give about a 95% certainty that FSD will be rolled out by 2026. I can give about a 95% likelihood that robotaxi will be rolled out in 2026. You may not think it'll happen this year. You may not think it'll happen next year, but boy, it's hard to not give it some pretty high numbers for 2026. Same thing with the robot, same thing with the Gen 3. So by 2026, all of this stuff should be not only ramping, it should be in the middle of a significant ramp. And that'll be known by the middle of 2025. So we're 18 months away from the street going, oh my gosh, we've missed our chance.
I buy that. You may be early on some of your dates. You may be, nobody's to know. And you are the perennial optimist, which, I think I'm the perennial, I don't know, maybe I'm a pessimist on something. But look, 2026 is a breakout year. And they said it on the call. They said we're between waves.
Yes.
It's not the language that analysts use. I mean, really speaking, they say, well, we'll do X million this year. We think we'll do Y million next year. And the following year, we'll do Z million. And that's what they understand. But I get it. You've kind of detailed it out, and I think it's there, and I think the wave in 2026 is coming. If I live that long, I'll be very happy.
So I have another theory I'm going to throw at you right now. Maybe the price decrease that we've seen over the last 6 weeks had nothing to do with Elon's posting on X, had nothing to do with any of the negative press that I've been just ranting and raving about, but it had everything to do with the street believing Troy Teslike.
Yeah, I mean, Troy's postings on Patreon are very, very prescient. He really does understand the numbers and the flow. And so he, actually, I came out to the same number he came out to, yes, but
I saw that.
I guess for completely different reasons. Right. We each missed different parts of the estimate, but the numbers were very close. But Troy is very prescient. He has his finger on a lot of the pulse. So yeah, I think they were following him down. They didn't adjust down to as far as he adjusted down. They still came at 74 cents, and while he was 70 cents.
I think so.
there was a 4-cent divide.
Right.
And I poo-pooed his 70 cents until I did the numbers. And when I ran the numbers, it came out to the same number. So I think that, it's unfortunate that they didn't buy his number directly, because they would have
Then
been
we
a
would
lot.
have up.
Yeah. So I think what you're saying is correct.
All right, but he is actually now where I think he misses is he usually starts the year or the quarter low, and then he
Yes.
usually moves up as time goes by. Because next year I think he's
Yeah.
he's got it at less than 1.1 million, which I think will turn
No,
out
2.1.
I'm sorry, 2.1, less than 2.1.
Correct. Yeah, he is, and that's not different to how it's been in the last couple of years. So I kind of ignore that number. I mean, I'm so far above him that there has to be a very big, very big gap, a very big difference in what happens. But we'll see. Time will tell.
So one of the big disappointments, I think, among the crowd is going to be the Mexico has apparently been put off quite a lot. He suggested they have to actually have the Gen 3 lineup has to be up and operating before they're going to start digging dirt.
He did kind of allude to that. I'm not sure he means not dig dirt. I think they're going to throw up I think they're going to lay the foundations and throw up the walls. I think it's the question of the equipment, although some of the equipment has to have prescribed
Right.
foundations. So that may be an impact. We'll see. You may be right. We'll see.
All right. And then there's the advertising side. They did spend quite a lot of time talking about the advertising, and they suggested that they did quite a lot of testing in the fourth quarter. But I
Could have fooled me. Could have fooled me.
Oh, yeah. So the part that I didn't like was he says, but boy, we're going to be careful how we spend that money. That was like, oh, come on now. This is the place where you should be taking.
I looked up a number today, Randy. What do you think Apple spent to launch the iPhone back in 1997?
Oh, I have no idea. Not a close.
What would you get? Given all, what would you guess in?
Well, I would certainly think it would have been, in the hundreds of millions.
It was a couple of $100 million.
Yeah.
And just look at the impact that campaign had. I mean, it was staggering. 200 million for Tesla over a year is like nothing.
I know. I know. I just think, why not? I'm just looking at my notes real quick here, Larry, to see if we're missing anything else that was really important here. It was interesting that of all the places he picked to talk about expansion where they're underselling, it was Japan, not the flyover states in the United States. Somebody needs to get him in touch with me. Larry, you know people that know him. You need to have him give me a call. We need to talk about the flyover states, not Japan.
I'll tell him. I'll tell him from your lips into his ears. I'll tell him.
Oh yeah, and Adam Jonas.
Look, yeah.
Go ahead.
Go ahead. No, you were going to say about Adam
I was just going to say Adam Jonas. Adam Jonas asked about AI Day 3. Like everybody I talked to is just like this about AI Day 3, but it turns out that he thinks maybe he's giving competitors an advantage when he has these days. And that it appeared that he hadn't even thought about when he would do AI Day 3. I think that's pretty odd. Everybody will be, I think, a little disappointed if we don't have one of those fairly soon.
Yeah, well, we'll see about that. We'll see. Yeah.
All right, let's see. I have a big pink thing here. It says, Dojo, hedging is bet with NVIDIA, currently training limited on FSD. So I thought that was something that will probably be completely missed by almost everybody, but it's really important, I think. So they are training limited on FSD right now, even with all those NVIDIA chips, even with Dojo, which is beginning to train, but it's not it's not the central thing. And the Dojo is a big it's a risky bet.
The big bet. I mean,
It's a big
it's
bet
a
that
risky
can pay
bet.
off big time, but that the NVIDIA chips are really the core of training the FSD, and that right now they are training limited. I think that was a real hint of where things are right now. Chip. So, I mean, the FSD and the NVIDIA.
Yeah, that was an interesting moment that, you know, I saw some of my friends online saying, "Oh God, Dojo's a lot, you know, write off Dojo." You know, I've been in these development cycles before. It's never a straight line. It's always a struggle. Hardware, particularly silicon, is a real bitch. It's a tough road in, and it's a tough road out, and it's never a straight line. So we'll see. I mean, I'm not going to pass any judgment because he didn't give us enough information to understand.
Well, yeah, so I'm not worried about Dojo. My investment in Tesla has nothing to do with Dojo. It's just that's an optionality that is way beyond any of the other optionalities that I'm concerned about. And writing off $1 billion if it doesn't work, it's a drop in the bucket. My concern was, or my interest was, that they are training limited. That is the point at which FSD right now is needy. It's not in data.
The world is training limited.
Yes.
And given the nature of this technology, they are always going to, well, not always, they're going to be training limited for some years to come.
Yeah. Yeah. So I wonder what that means. It was interesting to have him say it, but what does that really mean? Does that mean FSD is many months out because of training? Even if everything goes well, are we looking for that moment when all of a sudden it just starts to work like we had with Chat GPT? Again, we would be guessing, I suppose, but that was, I thought, a pretty important comment.
Look, FSD already works better than Chat GPT works. Trust me.
That's true. That's true.
We passed the Chat GPT moment some time ago. I think that, you know, my estimate was 2 to 3 years. We're 1 year into that. So I think we're at least a year away and possibly 2 years away. And I haven't changed my view on that.
Okay.
Time will tell.
Yeah. Yeah. Well, Larry, I appreciate you holding off on your dinner to be able to make this happen tonight. I hope that it was valuable to everybody out there. We've passed through another earnings call. We are not quite at the closing of after hours yet. It is currently Tesla down $11.73 at 196.10. And we'll see what happens when it opens in the morning. Because you never know. The after hours is not always predictive of what will happen in the morning when people have a chance to really think about it overnight. Larry, just for fun, I always, this is actually Good News Wednesday. So we should take just a minute to see what the other things that are going on now. We have the 10-year up another, it's only a basis point in the after hours or the pre-market. We've got oil continuing up a little bit, but still about 75.37. It's up a little strong right now. Natural gas up a little bit. I saw some articles, Larry, where it was saying that the cold snap has finally started to dip into the U.S. reserves, and that's probably why it's picking up.
Yeah, I spoke about that last week, that we finally got the cold weather. Yep.
And gold even, copper as good as even, and we have the indexes, the Dow up 35, S&P down 1, and the NASDAQ down 18. So relatively not.
Yeah, we'll talk about it on Friday, but I was looking at some numbers that one of my favorite analysts put in their daily blog or their daily letter. You know, the number of restatements of labor, of unemployment.
Yes.
In the last year, downwards.
Yes, every time. Yes.
an absolute record, all-time record,
Yeah,
by
sure.
a huge factor. And so, I think that's weighing. I said earlier today on a Spaces, if this Federal Reserve doesn't
Yes.
act in March, I think we're in for real trouble.
Yeah, well, we're on the same page on that. My question is kind of the opposite of yours. My question continues to be, if the PCE comes in this week at 0.1 or at 0, at 0.1 or at 0, even at 0.2, which is what the street is expecting, what would be holding them back at this point from doing at least a 25 basis points in March? I can't figure it out.
Unimagine.
I can't imagine. Yep.
All right.
Okay. Thank you, sir. And
Thank you.
we'll see you on Friday night. And to all of you out there, it's been great talking to you.